Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Today we are on Monday, 15th of August. During this Asian session live market analysis and forecast webinar, I am going to give you the session-wise forecast from 15th to 19th of August this week. And today, 15th of August, is the Independence Day in India. So, wish you all happy India's 70th Independence Day. Now, in this webinar, I am going to cover the forecast for this week, then the market reading using the initial lows and the highs, which are noted down around 3:30 GMT, then also the trading strategy in order to find out how exactly, irrespective of the market move, we will be in a position to earn money from that other market. My contact details are given here. So email ID is dr@i-knowindices.com. Then my Skype chat ID is iknowindices@hotmail.com. In the event, if you want to contact me and chat with me live, you can use this. And my website address is iknowindices.com. So I'm giving the market forecast since 1999. That's what it mentions. Now the three components we follow, namely the derived forecast, market reading, and the trading strategy. So one by one we will see and identify and also understand what the players intend to do from time to time, so that accordingly we can develop our trading strategy. So once you understand well the player's intentions, then we do not become frustrated or our patience will not be tested, and we know very well, okay, this is the purpose for which the players are doing it. So accordingly we'll also manage our time, and we will also plan our strategy and try to participate in the market. So first of all, we need to understand the forecast part of it. This derived forecast is from that of a sequential statistical analysis, which is referred as an algorithm, and with which I am in a position to give, based on the time frame, the day, which is divided into 3 sessions, how the market is expected to move. So swing and firm up during that of the Japanese session up to that of 7 GMT. Then 7 to 7:30 GMT is the gap time. They are expected to make a higher level swing, a false move on the higher side, and then make the higher level swing and slide during the course of the European session till close of European session as a weak beginning false move. So the weak beginning false move is part of the game, and what they do is they just pretend as if the market is weak and make the move. Then subsequently, which will give the impression to the traders that the market is going to be bearish, and then they take sell positions, etc. Then later on, the players make the move against the expectations of the traders. So this is what they do from time to time. So they are expected to do the weak beginning false move either during the European or the US sessions. Then during that of the US session, they are expected to make the lower level swing and then rise. So always when you come across swing and firm up means they will do the lower level swing and rise, or firm up nominally, or a nominal rise will be seen. Then swing and slide means they will make the higher level up and down move and then slowly slide towards close of the European session. Then they will make the lower level swing, just make about 10 to 15 pip up and down move during that of the start of the US session, and then start slowly gaining the levels. So this is how the interpretations are. They are all nothing but the qualitative expressions of the market moves. So if you understand well, then it will be easy for you to take appropriate trading decision. Say for example, swing and slide, you can take a sell during the early part of the European session and book profit during the late part of the European session. Swing and rise move, you can buy during the early part of the Japanese session and then book profit during that of the rise expected to happen during late part of the Japanese session. But in the event if the market goes against our expectations or against the forecast, then we have the trading strategy to limit the risk. So you can either simply follow the forecast and trade accordingly, or fine-tune the forecast and also understand the long-term moves of the market. Namely, they are expected to make slowly swing and gain moves for the week. So in that process, what you can do, dips are buy opportunities. So whenever they dip and form the new low, you can take the buy, and then subsequently you can keep the hedge order to limit the risk. And once the market moves in your favor, you can keep stop at entry in the hedge and in the buy position. Then subsequently wait for the market to maximize the profit. And you can follow when they are going to quickly rise and book profit during that particular time. So this way you can make use of the forecast for the long-term trade also. So today they are expected to make the swing and form up, and then swing and slide during that of the European session, and then swing and rise during that of the US session. Then tomorrow they are expected to gain during that of the Japanese and the European session, and make small swing and then firm up during that of the US session. After gaining some levels, they are expected to make the stop and down the downside. During that of the Wednesday, midweek, they are expected to make a downward dip and then rise and firm up during that of the European session, and then slide again during that of the US session. So this way, they will try to make the either way stop ends on the downside on Wednesday, and then rise and make the hit of the stops on the higher side. So that way a downward move and the upward move will alternate on Wednesday and Thursday. That will give the real surprise to the traders. So, and also you find nowadays they are making either way stop ends in the absence of good volume from the traders. When the traders' volume is slowly coming down, then the players also find that there is no significant point in continuously rising or continuously dropping the market. So what they find invariably, when they just make the drop, then the traders liquidate the long and term sellers. So the players are not in a position to drop further. If they drop further, what will happen? Those who have taken the sell position will book profit. So they just gain and induce the short sellers at the lower level to do the short covering. What the traders do, they just do the short covering during the rise and turn long in order to earn back the lost money. So when all traders turn long, what the players can do, they cannot rise further and give them the profit. So instead they make the drop, so that those who have taken long position liquidate the long position. So here you find the traders do the delayed trades, that is sell after that of the drop and buy after that of the rise as breakout trades. So in the event of such scenario of the traders, the players find that they have no other option than to do either way stop ends. So whatever be the data release and whatever be the sentiment they create, and the data release, they are not able to make any consistent follow-up move, and they have to invariably stop the move, because once the predominant of the traders go in line with that of the market move, then obviously you find that the players have got a lot of limitations now in order to handle the market. In such a situation, they will prolong this sort of swings, and then they are expected to make aggressive gaining move during that of the last week of the month. So today it is the third week. Then the fourth week you could come across more aggressive gaining moves might happen in the market. So that when the traders think that okay, the market is going to be range bound. Whenever there is a rise, we'll sell, and whenever there is a drop, we'll buy. When they take a decision of that nature by looking into that of the chart, finding that okay, this is the support level and the above is the resistance level. When it comes closer to the support, when they start buying, the players will make one more downward stop out. Then the traders think that okay, the support is there at the lowermost level and take sell position. Then they will gain the level, and afterwards the traders think that okay, this is the resistance around 200-day moving average, so we'll take a sell. Then the players are expected to gain more and show the new higher level. This sort of shift in trading zone is expected to happen sooner or later in this month. So look for that and try to do only the buy and sell trade. Avoid doing sell and buy trade. If there is an opportunity to do the sell and buy trade like swing and slide, wait for the slide to happen and then take the buy position and book profit during the rise. So when you take the buy near the lowest level and keep the hedge order to limit the risk, maximum what the players can do, they can hedge you, and if you watch and close the hedge properly without any loss or with a small loss and continue to hold the lowest level buy, you should be able to definitely book profit on a daily basis. But after the rise, if you try to take the buy, there comes the biggest problem. So wait for them to settle and not reach the low set, and then you take a buy, you can do the position trade. Now these are all the levels they have shown it so far, and also on the higher side or the higher level, the levels are given here, this top post, and they are all the expected range in which the currencies are expected to swing, and the lower level you find the actual level so far established. Now in the case of euro, they are expected to make 1.1125 could be the low and 1.1475 could be the high. In the case of GBP, 1.29 to 1.3375 they could go. And in the case of yen, they are expected to make an aggressive gain in this week from 101 to 106. Then Swiss franc from 97 to 99, they are expected to swing. And in the case of Canadian dollar, they are expected to make one more downward push to that 1.28 area and then firm up. Then Australian dollar, they are expected to make one more push on the higher side to 0.79 area. So this is how they are expected to make their swings in this week. These are all the mathematically derived levels, and every week you would have noticed invariably the market is in this range and they are not deviating much. So you can use it as a guiding factor. Then accordingly, near the low you can just take the positions and try to wait for the market to gain and maximize the profit using a trailing stop and also the take profit trailing order. So that way we'll be able to really maximize the profit. You will not get struck. See, if you use the trailing stop, you will not get struck with it of the unfavorable position. So try to keep in mind that the market is expected to gain in all the currencies. So you can also see now how exactly the net change is there in the market. Now looking at the euro and GBP, euro is showing nominal negative net change, GBP is showing nominal positive net change, which is the USD gaining move. Sorry, USD gaining move in the case of euro, and USD weakening move in the case of GBP, a contrarian move. Similarly, USD yen is showing positive net change, and GBP is showing positive net change, which is a contrarian move. USD yen is showing the USD gaining move, and GBP is showing USD weakening move. Then coming to the of the commodity pairs, both USD CAD and Australian dollar are showing positive net change. USD CAD is showing the USD gaining move because it's a denominator, and the positive net change in the case of Aussie, the numerator, it shows the USD weakening move. So USD gaining move is shown by that of Canadian dollar, and USD weakening move shown by that of Australian dollar. When they make such contrarian move, we know very well they handle the crosses. So during that of the European session, when they make the slide and give the impression to that of the traders, the market is going to be bearish, then you watch and try to take the buy position. You will be able to really see a good profit during the weekend time. Now let us take the initial lows and the highs which are set during the day, and also you have to find out what is the spread between the high and the low, and if it is more than 40 pips, then you can commit positions. If it is less than 40 pips, then there is no point in committing positions because they will simply hold such currencies. Now in the case of euro, 1.1154 is the low, 1.1170 is the high. They are not breached the low or the high. In the case of GBP, 1.2900 is the low, 1.2940 is the high. They are not breached the low or the high. And in the case of yen, 101.12 is the low, 101.45 is the high. They are not breached the low or the high. CHF 97.34 is the low, 97.59 is the high. Here again not breached. Then Canadian dollar 1.2949 is the low, 1.2976 is the high. There again it is not breached the low or the high. And Australian dollar 76.37 is the low, and 76.62 is the high. Here again the low or the high are not breached. After forming the low and the high by 3:30 GMT, when they are not breached it till 5:18 GMT, it indicates that the players are making subdued moves and expecting the traders to commit positions before going to the next move. So they will just pretend during the European session the market is going to drop and then try to take up the market upward. So kindly watch carefully. At the time, during the drop in the case of euro and GBP, when they make a nominal drop, you could come across the denominator currencies gain quickly. Then afterwards, euro, GBP and Australian dollar will also gain levels, and that way they continue the contrarian move among the majors and the crosses. Now these are all the trade calls I wanted to give. We can try it in a demo trading platform. So buy near the low in the case of euro 1.1155 with 1.1225 as the target and 1.1120 as the hedge order to limit the risk. Similarly, in the case of GBP, near that of the low, you can keep the buy order and see how they are filling it because it's weak beginning time. So they will try to pretend at least a false move up to that of the low or a stop and below the low before taking it upward. So during that of the late part of the European session, you could get a definite fill and keep about 75 pips above the limit order to start with. And once the going is good, you can remove the hedge order and keep stop at entry and continue to trail the stop in a profit-making position and take away the exit order on the higher side. And thereby, you can move the take profit order on the higher side. As a result, you will find
that the market, when it gains continuously, will be able to really maximize the profit. And also in the case of yen, 101.12 near the low, you can keep the buy order, and they could make a brief downward stop and quickly and then reverse and rise the market. At the time, you should be able to get the fill and keep the hedge order to limit the risk. So in all, they are expected to make at least 75 to 100 pips gain moves this week, and you should be able to see that. Last week they had done consolidation after that of the non-farm payroll before the previous week, and so this time they are expected to create a different sentiment and activates that of the traders pending positions. Every time they will take up a topic and just exaggerate that particular topic, highlight it. And you know that they've been talking about British exit and then subsequently about the data release, etc. So every time they will try to take a new topic, and all the analysts will think that, okay, that is going to be of prime importance and discuss about it. And just 2 weeks back, we would have noticed that everybody was talking about non-farm payroll and the BOE interest rate decisions, etc. And they are all discounted. Market is somewhere, nowhere connected to that of those data release. So that is how they will try to make it from time to time. Understand that the players only want the analysts to create the market sentiment. Then once the traders commit positions, the players act against them. So it is very, very difficult to escape from the other players' hurt. So you have to necessarily use the hedge order to limit the risk, give importance to that of the trading strategy, so that we will be able to really make use of the market swings as great trade opportunities. These are all the market timings. So each day is subdivided into 3 major sessions: Japanese, European, and the US session. And in between the sessions, you come across a gap time during which the orders from that other bank treasury do not flow into that other market. And that is being used by the players to make the false move in the market to trigger the stops. And so 0030 to 7 GMT is the Japanese session, and 7 to 7:30 is the European, the gap time before the start of the European session. 7:30 to 13 GMT is the European session, and 13 to 13:30 GMT is the gap time before the start of the US session. US session is from 13:30 to 20:30 GMT, and 20:30 to 0030 of the next day is the gap time before the start of the next day again. So each session is subdivided into early, mid, and the late sessions. So early and the late sessions are 1.5 hours from the start and towards close, and mid session is in between. Early and the late sessions, they handle the majors. Mid sessions, they handle the crosses. So you need to follow the timing, follow the levels, and follow the forecast. Then you find trading is really interesting, and as expected, the market will make moves. And commit only positions wherein the spread is made more than 40 pips. Between the high and the low, they should make more than 40 pips. And commit positions during the dip in that currencies, we'll be able to really see nice moves happening, and we are able to take profit out of that. And if you see Euro and GBP, GBP is showing positive net change and Euro is showing negative net change. So it indicates that they wanted to drop first Euro GBP. For that, they are going to gain level in the case of GBP and drop Euro nominally. As a result, Euro GBP will come down. Then afterwards, they will gain again Euro, followed by the GBP. Then Euro GBP cross will make nominal gain. So that way they will make either way moves in the case of the European crosses.
So this is the forecast sheet, and you can find out how exactly they are expected to make the moves in this week. If you've got any question, kindly ask me in the questions window. I'll be willing to answer those questions. These are all the levels in which the market is expected to swing during this particular week. Then the initial lows and the highs set for today. They have not breached the low or the high. Okay. So if there are no questions, then I take this opportunity to thank FX Trade for the facilities provided to present the webinar. And I'll come back on Friday, 19th of August, and review the forecast, what I have given it. So wish you all happy trading. See you on Friday.